This is Bloomberg Tech Asia. I'm Shery in Tokyo.
And I'm Annabelle, Droulers in Hong Kong. Well, welcome to the first ever episode of Bloomberg Tech Asia. We are so excited to have a home for Asia's biggest tech news and innovations. It's not just the established names like Alibaba, TSMC, it's the startups as well. So, Shery, we've got big plans for this program.
Very exciting. From China to Japan, South Korea, Southeast Asia. Of course, we got you covered, especially the latest innovations, artificial intelligence, chips, EV tech, so much more that we will bring you every month. But first, for today, as China's AI surge reshapes the global tech balance, we'll hear from one of the so-called six little dragons, Manycore, about its overseas ambitions.
We'll also discuss where the opportunities are for investors and whether another deep-seek moment is close with Zhenju Scott of Power Dynamics and Wayne Shiong from China Growth Capital.
And one of the world's key chip gear makers is shrugging off fears of rising competition from China. Tokyo Electron CEO telling us they're set to widen their lead even as Beijing backs rivals with billions of dollars. The Chinese tech sector has been on a roll since the arrival in January of DeepSeek. The AI startup stunned the world with a product that claims to match or outperform Western rivals at a fraction of the cost. Its rapid strides in AI are poised to escalate the tech Cold War between the U.S. and China.
The number one factor that will define whether the United States or China wins this race is whose technology is most broadly adopted in the rest of the world.
It's not just a matter of building more sophisticated models. Competition between the US and China on AI is expanding to standards, governance, infrastructure, and more.
It's very hard to say how far ahead we are, but I would say not a huge amount of time.
Any lead the US has is eroding fast, despite restrictions on exports of advanced semiconductor technology.
The Chinese competitors have evolved and advanced greatly over the last year, doubling, quadrupling their capabilities every year.
Washington is shifting from a strategy of China containment to international bloc formation and promoting US-led tech ecosystems.
When it comes to the rest of the world, we want American AI stack, starting from the GPUs to the models, to everything on top.
Pushing countries to build on such frameworks will not be easy, even with the Biden-era AI diffusion rules scrapped.
The release of DeepSeek AI from a Chinese company should be a wake-up call for our industries that we need to be laser-focused on competing to win.
Chinese tech now presents an alternative to dependence on the West, with AI leaders like DeepSeek and Alibaba going open source to build quickly and at scale. That's putting the spotlight on flows of talent and money.
American venture capital funds funding Chinese AI, is that in our national interest?
Like Washington, Beijing wants to shape global norms for the use of AI and sees an opportunity in the global south in particular.
Going forward, China will open its doors still wider to the world.
Yet the choice of US or Chinese AI technology is unlikely to be binary, at least for now. Governments have navigated the twin poles of power for years and will likely keep doing so until an obvious reason emerges to pick a side.
Well, let's get more on the outlook for investment as the China-US AI race heats up. But joining us now is Wayne Shiong, co-founder and venture partner at China Growth Capital. And we also welcome Zhenju Scott, co-founder and CEO of Power Dynamics. But Wayne, I'll start with you because sometimes we know that, yes, there's that increasing competition that we see between the US and China. It can also just give way to even greater competition. So we had a call this week at WF and Tianjin, and we heard from a former deputy PBOC governor, but essentially saying there could be more than 100 DeepSeek discoveries in the next 18 months. Maybe it's a little ambitious, but does it seem realistic to you?
Well, I think what really caught us is DeepSeek. It kind of caught us off guard, right? Before DeepSeek, everybody was just following the big companies, and especially given the assumption that how much OpenAI has spent on AI models and foundation models, and DeepSeek just came out, and DeepSeek has been around for some time for the people in the AI circle, and people just have been following their papers for quite a lot. But this aha moment, just came really off guard.
Did it catch you as off guard, Jen?
It wasn't actually in your very show 18 months ago. Before the R1 was released, we were talking about how efficiency gain would be really a gain from China ecosystem. So it wasn't really surprising. Although I think when we talk about DeepSeek, are we talking about fundamental innovation like R1 that's really reduced the CapEx narrative so much? Or are we talking about the shock factor that bring to Wall Street? So I think the shock factor bring to Wall Street probably would not be hundreds. It would be very difficult to have another moment like that. However, I think especially in terms of hardware aspect in China ecosystem, robotics, infrastructure, there will be a lot of innovation coming in the next 18 months.
And that is key, right, Jen? Because, of course, we continue to talk about foundational AI, but it's really the applied industrial side. How do you actually make money and monetize these technologies that are key? What will you be watching?
Well, I'm not only watching, I'm doing. I think end of the day, the ultimate bottleneck for AI is really energy and how efficient, how sustainable the energy is going to be. And then you integrate that with the efficiency of compute. So that's why with Power Dynamics, we're probably the only company or the first company integrate energy storage, immersion cooling, and GPU cooling and produce this kind of modular data center solution. Because as we have observed in the past 6-7 months after R1 was released, we see the hyperscaler in terms of stacking on very expensive CapEx kind of infrastructure, as well as very decentralized, edge computing, both has to, blossom in the past few months. So I think have this kind of flexible, stackable, distributable, modular solution, integrate energy as well as compute, efficiency of compute is very essential.
And Wayne, I think you agree with Jen when it comes to that aha moment that DeepSeek was, that potentially we might not see again for a little bit of more time to have passed. In the meantime, though, when it comes to the innovation landscape itself in China, I'm coming from the World Economic Forum, and these startup founders were talking about how ruthless and competitive it was. How do they survive?
Well, I think one of the strategies for them to develop applications. So my assumption is that all of the large, the foundation models companies, or a majority of the foundation model companies will become application companies. And of course, all of the incumbents will become agentic application companies. And so going after applications is definitely one of the monetization they can go. And the second strategy is for them to go global instead of just covering China, the local market, and they have to go to the biggest market outside China.
Well, that's the US. So given we do have the rise in tensions that everyone knows about, but how are you also advising startups to work and manage that?
I think in the legal framework, there are many ways to structure a company as a pretty decent Silicon Valley or a global international company instead of just being a local startup in either Beijing, Wuhan, and Chinese local company. And also in culture-wise, I think they need to build out their outlets and even move their headquarters to either Silicon Valley or other major cities. I think in today's market, Japan and even Germany have presented pretty decent opportunities for the startup companies in China.
Jen, something that you've spoken about regularly, really, but it's not just the US versus China, it's US plus China. But explain to us.
So everybody asks about U.S. versus China. In my view, I think it's almost a little bit pointless to compare Apple with Orange because U.S. is so good at certain things in terms of GPU, compute, chip, semiconductor, has absolute leadership right now. And everything else in terms of the product to fit to go to the market, in terms of scalability, in terms of application, and also all the infrastructure energy-wise is really China's leading with the entire ecosystem, not as just individual companies right now. So I actually think the world can benefit a lot more in terms of thinking about how you can take the advantages from both sides and really build a very robust ecosystem for the global market instead of just focus on the two countries. There are more than two countries in this world.
When it comes to the development of artificial intelligence, the fact that the likes of DeepSeek, for example, are going more open weight instead of these closed sources, does that sort of help change the paradigm and the thinking around how this development could go forward, Jen?
Absolutely. I think Huang actually sets off this a very positive race, which is both on the U.S. and China side. Multiple leaders in AI space started to do open weight and open source. And yesterday, actually, Google released those flexible robotics, and they can work on the edge computing offline. All of this really require this very decentralized approach in terms of AI instead of very centralized in the walled garden like OpenAI. So I think that's really the future, and I think in the next 18, 24 months, the surprises we will see, it will be this kind of explosive, very fast advancement from robotics, applying this local compute, very private, very efficient kind of applications.
Yeah, there's definitely a lot of opportunities, and Wayne, you're actually raising for a 1 billion yuan fund at this moment. What exactly are you looking at in particular? And I'm also interested just if you're changing any of your T's and C's, because we know R&B funds have had some pretty strict conditions in the past. Yeah. Are you having to relax them at all, given that you've just got so much excitement around this space?
Well, yes and no. Yes, well, so the RMB market is not like the U.S. dollar investing market, and where the LPs, the composition of LPs are quite different from the U.S. market. And but with the rise of DeepSeek, I think everybody's excited about the future of AI. And what really interests us is on the application level, and also the intersection between AI and other verticals. And as I said, even biotechs are adopting AI for new drug discovery. So basically, for VC fund like ours, we're small and we're early stage. We have to back innovation from early on.
All right, I'd love to know which T's and C's you're looking at changing. But thank you to Wayne. Thank you, Jen, as well, for joining us for our first ever episode of Bloomberg Tech Asia. That was Wayne Shiong there, co-founder and venture partner at China Growth Capital, and Power Dynamics co-founder and CEO Jen Scott. But up next, we're going to be talking business strategy with Manycore. That's one of the 6 little dragons emerging as drivers of China's surge in AI. We'll have plenty more ahead. This is Bloomberg Tech Asia.
After DeepSeek burst into the global limelight, attention is focused on its hometown, Hangzhou, and the startups the local media call the 6 little dragons. One of those is spatial design software supplier Manycore, which is said to be the first of the group to go public. We spoke to founder Victor Huang about their global ambitions and whether he's concerned about tighter U.S. controls on cutting-edge tech.
Right now, we have a very huge opportunity on physical AI. Actually, in United States, our main revenue is from the physical AI part. From the last 14 years, we accumulate a huge amount of physical correct data. Then we use the data to training the physical AI for the we call it spatial LM, the model to understand the physical world. Then we are selling the services and also the physical correct data to the company to help them to training the physical AI.
When it comes to selling services, is it easier to do overseas than domestically where competition is very strong?
I think there is not strong competition on just in China. It depends on how many companies are working on the physical AI. Like in some company, in some country, most of the company are working on the real estate or something else. So we're selling our traditional spatial design software called Huang. But for American, I think there are huge amount of high-tech company in Silicon Valley. So we are mainly provide AI training services for that kind of company. But in China, we already, because we start from China, we already have a huge amount of decoration company for as a customer, like around 40,000. Then we also have a lot of customer for AI training, but compared to the decoration part, it's still small. But in America, the training part is bigger.
Given that you're the first of the Hangzhou 6 to actually go to market, do you expect you to set sort of the benchmark for future Chinese entrepreneurs to follow?
For ourselves, the Hong Kong IPO is planning several years ahead. So when we start to prepare for the IPO, we know nothing about the Sixth Dragon or something. So it's a kind of surprise. But we hope and we believe we will got a very good IPO result. Then we hope we will be a very good example for Chinese tech entrepreneur. Then make them more confidence to be just put more efforts on research than to be listed in the future.
That was the Manycore Tech co-founder and chairman Victor Huang speaking to us at the World Economic Forum in Tianjin. And caught in the crossfire, of course, of this global tech war is Tokyo Electron. And up next, we'll have our exclusive interview with its CEO on how Japan's top chip toolmaker is navigating tensions. This is Bloomberg Tech Asia.
Tokyo Electron makes equipment essential for producing advanced semiconductors. It's also caught up in tensions between Beijing and Washington and is restricted from selling some equipment to mainland China. We spoke with CEO Toshiki Kawai about the global tensions over tech and whether their share of revenue coming directly from China will continue to shrink.
Until recently, it was around 45%, so nearly half. Investment in other regions aside from China will grow, so the ratio of China's sales to total sales will inevitably decline. About 35 years ago, China's sales ratio was around 30%, and I expect it to settle at around that level.
How long do you think it will take for Chinese equipment makers to catch up when it comes to technological advances to become a real competition to the likes of Tokyo Electron?
Actually, there is a gap with China's technology. I think it's possible to maintain the difference in technology between China and our company. I'm sure that Chinese vendors are trying to catch up with us, but we must be faster. We can be faster than them in technology innovation, and that's how we can maintain or increase the difference. We are the SPE manufacturer, but we are not chip makers. So for us, it is key to work with the world-leading chip manufacturer to develop the best-in-the-world process and best-in-the-world equipment. The pace of technological innovation is likely to accelerate. I believe this gap will continue to widen. Tokyo Electron is always pursuing the latest cutting-edge technology, so we believe there will be no issues with our growth.
What happens if the needs of the customers change? Because this year we saw the changes brought from DeepSeek with cheaper models, more efficient models that perhaps might need less hardware. Will that change our calculation going forward when it comes to what's needed for the next generation of advances for artificial intelligence?
The emergence of various AI solutions means there is potential for many applications, and the number of applications will increase. As a result, we can expect the overall use of semiconductors to expand. At the same time, the common global goal is finding a balance between digital transformation and green transformation. This will require technological innovations in semiconductors. With increasing applications, there will also be a demand for high capacity, high speed, high reliability, and low power consumption. This has been a constant necessity since the invention of the transistor radio 76 years ago. This pursuit of technological innovation will continue. Even as various AI solutions emerge, the demands don't change. I believe that the devices themselves will continue to expand.
How has the ongoing trade war and the uncertainty over tariffs affected your business and how you're preparing right now?
At this moment, tariffs are not applied to semiconductors. For example, if we look at Tokyo Electron's sales this year, the United States market accounts for 8%. Considering that tariffs are not currently in place and that the sales share is 8%, we believe the short-term impact of tariffs will be limited and minimal. But we need to continue monitoring developments. We have to watch the progress of tariffs. Our value lies in how we improve and enhance productivity, cutting-edge technology solutions, and productivity enhancement. We will discuss with our American customers and partners how to create solutions that go beyond these tariffs. We also see this as a business opportunity.
And Annabelle, remember when Japan had more than 50% of the global market share when it came to semiconductors back in the 1980s? Well, that shrunk to 10%. But we cannot overstate how important Japanese technology is when it comes to making these high-end advanced chips, right? We're talking about equipment, we're talking about materials, and how they fit into this global US-China competition.
Yeah, absolutely. It is so pivotal to the overall semiconductor ecosystem. But again, to your point, where we see so much competition and innovation coming from now, it is undoubtedly not just Taiwan, it's also mainland China. And this week, I've actually been speaking as well with a lot of different AI startups in the mainland. And I'm hearing a really consistent message that they're just busy building. So the domestic pressures, they're intense. And that's as well a reason why they sometimes need to expand abroad.
They have a huge talent pool, right? We're talking about more than 17 million engineers in China as back as 2020, but that, of course, just increasing, Val.
Yeah, absolutely. And again, as we say, the first ever episode of Bloomberg Tech Asia, there are just so many different innovations, so many different companies that we can profile in this part of the world. So we've got you covered. Thanks for tuning in for the first ever ep, but join us again next month.
And don't go away because we'll be hosting a live Q&A with Bloomberg experts on the race for AI supremacy. Listen in on Bloomberg.com. Subscribers can post their own questions at 10 a.m. Hong Kong time.